Is seller carrybacks. And for coming, my name is Terri Peterson. I'm with Fidelity National Title. I am a manager there, a team leader, and senior escrow officer. I've been doing this about 37 years. So obviously, I think I'm gonna retire from it. I like it. But I had shared with a couple of you that it just creative financing and different types of transactions are something that we all need to kind of embrace, or at least look at as an option for your customers. It doesn't mean it's going to be for everybody. That's the thing. You have to really have a conversation with your customer to make sure that this is something that they would want to fall into, and the benefits and the disadvantages. And so it's the class. I didn't give you guys a ton of paperwork because if we're going to do more talking, so that's why I put a little notepad for you guys to just put notes and then to have the copies in here for you, okay? So the first thing on the right side is just your contract. And the reason that I put a Galvar contract in here and right behind it, the financing addendum, these are the two that go hand in hand when you do a carryback, okay? Or any sort of different financing that might happen where the seller is involved. So you're going to have this financing addendum available. The contract itself, the reason that really the only thing that's different is the first page. I just ran it, but you know how normally you have your earnest money, and then if there's an additional deposit, and then the new loan amount if they're getting financing through a bank or a hard money lender or something, then the loan amount would go there. Well, in this case, they give you a section on your contract to put for financing or seller carrybacks. So instead of putting your loan amount up top, you would put it below for item number E. I get a lot of contracts sometimes that still come in with it in the middle and marked other. Yeah. It's not a big deal. I mean, we're gonna know because it's gonna have other, when I see the financing addendum and stuff, but the proper way is to just put it on line E, okay? So then it shows it's a different type of transaction. So in this, it's a regular resale, okay? That's the way you need to look at it. You are writing this up like a normal transaction. The only difference is your seller's your bank. They're your lender. Instead of the buyer getting a new loan from B of A or Wells or something, then they are getting a loan from the seller. So they're just acting like a lender. That's basically how you need to look at it. So that seller needs to know what their responsibilities are, obviously, of acting as a lender, right? So on your financing addendum, you're gonna sit down and wanna go through the terms for the loan, what your seller is going to agree to, how much they're willing to loan, what kind of interest rate that they wanna give. All of these are listed on here. If you go through the whole part of this packet, it's going to ask you every single question that you need to answer. It's just mark the appropriate boxes. So like in this one, the first box is marked. So they have parties hereby instruct escrow holder, and this is the one that's in favor of the seller. So this is the box that you would mark on your financing addendum for a carryback. You come down below and you can see where it says principal and interest. Not all carrybacks are principal and interest. Actually, a lot of the seller carrybacks that I get come through are an interest-only loan. And they do them for 3 to 5 years is kind of the norm that I see. And then they would go out and refinance it with a hard lender or sell or whatever they decide to do at that time. But they can do a 15-year loan, whatever they want to agree to, they can do, but you just have to make sure that the buyer and seller are on the same page is all. But principal and interest, if you're going to do a P&I loan, here's where you would put all of your info. So right here, principal and interest, $21.90, 7.5 interest rate, the due date, when the first payment would be, and the maturity date for it. So it's really simple to fill out. You don't have to have a lot of experience in this to be able to complete the financing addendum. On the second page of that, let's look through. These are the kind of items that you'll come across. So if it was an interest only and they weren't going to do principal breakdown, then your information that you have in this box here would go into the second page instead. So you have to figure out if it's gonna be a principal and interest or if it's gonna be interest only. And that would be which box you complete all the terms in, okay? Down below here, impounds. Does everybody know what impounds are? Well, let's go through it. Impounds are taxes, insurance that are added on to the monthly principal and interest payment or interest only payment. Sometimes people want the HOAs included in the impounds because we all know HOAs can foreclose on the properties, right? Yeah. So you kind of want to make sure those payments are coming in. So I see why a lot of the sellers require the HOA to be part of that impound account as well. There's also some special assessments in town, right? We have SIDs, LIDs, those are semi-annual payments. Sometimes they like to roll those in with the impounds as well. So it's really just whatever the seller is expecting from that buyer. It's more protection for the seller to have those covered in the payment, okay, than just leaving it outside. Somebody gets into a situation they can't, maybe the dues are a little high that month, they can cover the mortgage but not the HOA dues. That could be a problem because they could end up in foreclosure. So you want to make sure that you're kind of combining all of those items into the payment if possible, okay? Balloon payment. Most of these are going to have balloon payments because, like I said, the terms on most seller carrybacks are 5 years. They're, and then at that 5-year mark, there would be a balloon payment. Because even if you're doing a principal and interest loan for them with the carryback, that is most of the time amortized over 30 years. So you get the payment set on a 30-year, but so they can make it, but then it's due in 5, so they end up with a balloon payment to do that. Again, up to whatever the clients want to do though. They could do a 10-year loan if they wanted to. It's normally, you just got to have that conversation. If you're a listing agent, you just want to sit that seller down and see what their goal is, what they're trying to achieve, okay? Below that, prepayment penalty. You can either do a prepayment penalty or no prepayment penalty. Obviously the norm is prepayment is waived normally, but I see a lot of these type of loans where they will put, like, if it's paid in the first year, it's 3%. If it's in the second year, it's 6%. If it's in the third year, it's 8%. I mean, they'll change the percentages of what the prepayment penalty is for 1 year, 2 year, because they want to keep that payment intact, right? For 5 years so the seller can get that income and whatever they're using it for. So if there's a prepay, that will deter the buyer sometimes. So your seller may require that. So you just want to make sure. Late payments, there is no standard. I know most of us who have mortgages, most of our late payments are within 15 days, and it's a percentage or a flat fee. Again, you are open to create whatever you want on these types of transactions. You don't have to say, it's this or this. You can do $50 late fees, $100 late fees in 5 days. You can do a 10% late fee of the payment within 5, 10, 15 days, whatever you guys want to do. That's the joy kind of about these. You can set it however you need to set it. Not like a normal lender where they have all those stipulations. So that's where a buyer advantage, it's an advantage for the buyer, right? Because they're not gonna have to go through all of that. Default, standard default rate is normally 60 days. If somebody misses their payment in 60 days, then they're gonna end up in default and can go into foreclosure at that point. So that's a normal clause for almost every loan, whether it's a private bank or hard money. Failure to pay upon maturity, same thing, 10% charge until it's immediate, and they'll make it immediately due and payable. Penalty for advance, any advances made by the seller for payment of taxes, insurance, or any other advances. So this would be, what this little blurby means is if this buyer was making their payment on their own and directly to the seller, and they weren't paying the amounts that needed to, and the seller had to advance, like a bank would, say your property taxes didn't get paid and you didn't have an impound, your bank would come back and have to pay them, right? and then they might force you into an impound account situation because you aren't making those payments and are putting their loan in jeopardy. So that penalty for advance would fall like that. My difference with these carrybacks though, and we're gonna go through the left side, which we already kind of talked about too, is the loan servicing. That is the whole reason that you want the loan servicing in there, because you don't want that buyer to be able to just frivolously do payments. You want somebody monitoring that all the time. That's a professional that knows what documents to send out. They know what documents to provide to the seller. So for taxes, I mean, there's a reason to use loan servicing accounts. And I will not personally do one creative type financing transaction without them being used. Even if it's a family member, I have people sometimes go, oh no, it's my mom, I'm just gonna pay him. Even more so, I want a loan servicing when it's family, because it gets crazy, right? Everybody starts fighting. So it's good to keep it, they're a neutral party. If that buyer is delinquent, that seller is notified immediately. So that's kind of where that blurby wouldn't come in effect as much for you guys if I was doing the transaction, because we would use loan servicing. But if you're working with somebody else maybe and they didn't do it that way, although I wouldn't recommend it, that would come into play then, that type of clause, okay? Due on sale clause just means if they sell the property, loan's due and payable. That's all that is. Go on to the next page. Acceleration clause, same thing. If they default in making any of the payments, the seller can have the option to require the entire balance to be due and payable at that time. So the acceleration and due on sale clauses go together hand in hand. Request for notice. This request for notice box is really important for the loan servicing companies, because they will file the request for notice if there's an issue with the buyer not making their payment. And that's where they'll send the late notices to the seller. It gives the seller an option, right? To know, because they have the right now, even though they sold that house to the buyer, they're a bank, right? So if they don't get their money, they're gonna foreclose on that buyer. They can take their own property back that they just sold because buyer didn't make a payment. So even more reason again, loan servicing, they'll file the request for notices and the proper papers to make sure the seller stays in complete communication of what's happening with that loan, okay?
I have a question. So
Yeah.
if there is a client, I have a client right now that did not use a loan service, and what does it look like procedure initially when they didn't have a loan service and they are
Just making a payment to the
Right.
seller direct.
Yeah, and it's willy-nilly, it's not consistent.
Yeah.
What does it look like if they are interested in kind of getting a loan service?
Getting one? Oh,
Yeah.
absolutely. They can do it on their own. Doesn't have to be through an escrow and title company. They're a standalone company, and you can go walk in their doors and open an account direct with them. And the same type of paperwork that I provided copies of, they would use that for your own personal account as well. We have a lot. They do. I know you have property management companies in town, but sometimes I have investors even that just use these guys to make all their payments for them, and on properties or things like that. So they don't just handle these type of things, they do a widespread type of different things for you. So yeah, if they want to call them and it's just not happening for them. And the reason too, sellers, if I was carrying something, I don't know what I'm supposed to file with the IRS. I don't know how I'm supposed to claim it. I don't know any of that. So that's again where that loan servicing comes in, and they know and can explain to you and have you provide the proper paperwork to you, so everybody's good. Okay. After that, request for notice, loan servicing is marked there. That is really the last box that would apply. Most of the time, the buyer is who pays the setup fee for that collection account, and they pay the monthly check fee. And both I'm going to give you guys copies of the both companies in here, so you'll see the fees. They're very similar, though. They're not too. Westar and US are very close to one another. Let's see, insurance. Insurance is toward the back here, second to the last page. Buyer shall deliver to escrow holder prior to closing a 1-year prepaid policy of the insurance in an amount not less than combined outstanding balance of any loan being created herein. Buyer has to get homeowners insurance just like they would if there's a bank. They have to add the seller's information, and it's so basically the mortgagee clause on your insurance policy will show the seller's name, but then it'll be care of U.S. Loan Servicing or whoever you've set up the servicing with. So the insurance company has to make sure, because that seller's got to get himself covered, right, on the property. So just like regular homeowners, when we put our own lenders on there, the seller's has to be disclosed. So if you're representing the buyer, you want to make sure they're still getting their homeowner's insurance, and they don't have to prepay it. I know our instructions say deposit a prepaid, but we can pay the premium through the file if we need to. If they don't have to go and pay it and then submit that, we can pay it and get it started through there. But getting insurance is something that I find they forget on seller carryback transactions. So just as a reminder, make yourself a note. If you are representing the buyer, conversation up front, just say, hey, make sure you've got your insurance agent nailed down, because we're gonna need to have a binder and you're gonna have to get that for your coverage. And that is actually, I put a policy, I think I saw you pulled it out of there. Right behind the financing addendum is where I put, it just shows you a copy of that insurance right here. Now, why would somebody do a seller carryback? Why do you think they would do it? What would be a reason that they would, yeah, Mark?
Well, I've done it, I've done a couple with investors.
Mm-hmm.
So investors sometimes, well, there's two reasons.
Mm-hmm.
They usually get a better price for the property.
Mm-hmm.
And so if they're making profit on the greater profit on the property,
Mm-hmm.
and they're also continuing to make money.
Make money, yeah. And that is really it's a great answer, because that is one of the main reasons, two of the main reasons that a seller would do something. What if a seller bought a house and maybe it's a little upside down? Maybe they just bought it in the last year or something and property values dropped a little bit and they just got relocated and need to go move to Tennessee because they have a job, right? But they don't want to sell the house and take a loss. So maybe they will work with a buyer to see if they can negotiate something there with price and the loan amounts and stuff. So there's ways, that's where I say, sit everybody down, have a talk, put together a little book. What is it you guys are, what's your goal as a seller? What is it that you want to do? What is it as a buyer? You know, what kind of loan amount, what kind of interest rate are you looking for? And then you try to find those properties for your buyers that will fit that scenario. There isn't, I mean, you have to sometimes approach your seller because most people out there don't know that this is something they can do. So you get yourself well versed enough and know your seller and say, you know what, maybe this is something you might be entertained to do. You know, let's talk about this. And then you can throw it as an option for them instead of maybe doing that loss or having to come in with money to close. So there's different reasons and hardships that sellers can even come into that they would want to jump into this. Plus the other side is the investors and continuing to make money. Now the risks, let's talk a little bit about risks. So we kind of did, right? Buyer might not make the payment. Seller might have to foreclose on them. So that's something that sellers have to be aware of because we are a judicial foreclosure state. So you can't just, sometimes people will go, oh, can you prepare the deed? And just in case he defaults on the carryback, and then they can just record it back into the seller's name. They can take the property back. I've had people ask me that before. And there are transactions in the past that we have prepared deeds, not this type of transaction, but on, let's say, a contract for sale or an AITD, situations like those type of creative financing, we might prepare it and leave that on deposit with the loan servicing company. So if something doesn't unfold the way it's supposed to, the seller can take that back. We have some disclaimers and disclosures that we have them sign. But on the norm, we are a judicial foreclosure state. They would have to go through the foreclosure proceedings just like a normal bank would. So the seller needs to be aware of that because it is something that can happen. Defaulting on a loan, if you're carrying it, can definitely happen. So that's probably for your seller, the biggest risk is just that the buyer wouldn't pay and they might have to go through foreclosure. Mm-hmm.
Can you explain contract of sale?
We will. I'll talk to you a little bit about that. Let's get through this one and we can chat on a couple of things after that too.
All right.
Because it is definitely a creative financing class. So talking about some of these other things, and then we could do a full class on them at another time, but we'll talk to you about just kind of the concept of it, okay?
I know this might not be the right question for you, but we were talking about pros and cons
Mhm.
of creative financing. Is, for an investment point of view, or just for a seller, is there a financial benefit to doing a seller carryback versus sell, if they own it free and clear and sell it,
Mhm.
then they have capital gains,
Right.
1031.
Yeah.
Is that, I guess I don't understand what if there
The
is
tax benefit?
right, the tax
Yeah,
benefit.
well, I mean, first of all, they are receiving money monthly, right?
Sure.
So it's income.
Yeah.
So they are gonna have to claim that. But they're in a different bracket because they are now a lender for that loan. So when it comes to paying taxes or being looked at from their proceeds, they're not receiving, first of all, as much proceeds back because they are carrying a loan. They can file the IRS forms to submit that they are an active lender on that. I can't give you the exact tax benefit percentage wise, but that's how they would receive their benefit. But then on the flip side, with the payments that they're getting, they have to claim that.
Sure.
So I would say as an investor, I would find a way to wash that. So you're not having to end up
Business
paying or
expenses
anything.
then. Business expenses.
Yeah.
then,
Yeah. Just end up
my other
writing it.
question was, is it expensive to foreclose for the seller? Like, if it's
Well,
just-
judicial foreclosure, you'd have to go through an attorney, right? So
Oh, an
it's gonna
attorney.
be searching around and finding somebody that's got a good rate. And we have a couple people in town too that I work with. One's really expensive and the other one's really reasonable. They do two very different things though, as far as liability and amounts. So, for instance, one of them, I have the ugliest prelim on the planet. I'm not lying, you guys. I have not seen a prelim come across with this crazy stuff ever. And it's literally, we've got list pendants, we have 4 judgments, we have unrecorded deeds. So, and I don't want to jump off track either, but just to share with you, these are the kind of crazy things that we're running into. This Wells Fargo had the loan on this. They foreclosed because the seller didn't make their payment, okay? Well, in that foreclosure, there was a deed that was deeded to a realty LLC, and then that realty LLC deeded to an individual LLC, and then that person deeded back to Wells. So, and here's the sad thing, okay? This seller has paid every bit of the money that's owed for delinquency on the HOA, because it was initially, let me break track, I said Wells, but HOA is who initially foreclosed on this. So Wells was involved, got the deed back, and then they started that rolling process to these other people. Well, what happened is the deed ultimately ended up back with Wells, and now they're still considered the owner. And this poor guy has paid literally everything. He went and paid money for an attorney. The attorney doesn't get back to him, doesn't do anything for, I feel for this guy. I don't normally get personally involved with files because, everybody's, it's horrible sometimes, the scenarios. But this one I made phone calls on because this is crazy to me. And, the more I think that we talk out in our industry about certain people, we kind of talked about it, right? Cleaning house and washing the slate when we go through these little dips. It's with all parts of our industry. It isn't just from realtor escrow, it's from appraiser, it's from lender, it's from attorneys, it's from, everybody involved that can create issues for our industry. And this guy, this attorney, I finally got him. And I had to have somebody physically go into his office and have him call us. Because we can't move forward on this deal, period. It is literally dead in the water. So I asked him, I said, you need to get an attorney, another one, sorry, but you're gonna have to pay it, and you've gotta get him into court to do a quiet title. And that way, at least he'd get in court, get the deed back from Wells, and then end up getting his property back. But what a nightmare he's gone through. And this is 3 years, you guys, he's been doing this. It's horrible. So yeah, there's all kinds of crazy stuff out there right now. But doing these type of transactions is just how we were talking. It's an option, right? You just want options for your clients in a crazy market. So you have something to go to if needed. That's what this is for. Let's look at the closing statement really quick, right below it. I put that in there. It's at the bottom of the right side. I just want to kind of have you look. The reason I put this in here is so you can see how it would look to you. So basically the norm on a closing statement, right? First line's your sales price, debit, credit. But the main reason I did this is because on the buyer's side, the credit column here, it shows their earnest money and then the loan amount that the seller's carrying, right? Your closing statement should have a wash on the seller side. So that's how it'll look when you do a carryback. There'll be a loan amount for the buyer, but there's also going to be a charge on the seller side because we've got to reduce their proceeds, right, to cover the loan. So that's the main thing on this closing statement that I like you to see is if you're doing a carryback, because do you guys all read closing statements? Everybody good on closing statements? I mean, we can chat too if you want, I know. Because I'll talk about some things, sometimes people go, hey, so I'll bring it up. If you guys want to go through, we can. But it's still like a normal transaction. The only difference is the debit credit that you'll see for the loan amount, okay? But everything else, you would collect prepaid interest for the seller like you do on a regular loan. Everything's the same, establish impound accounts, pay, everything, insurance, everything's exactly the same on a resale. It's just your seller's the lender. That's it. So that's why I tell everybody when you go into these, don't be like scared of them because it literally is just look at the lender or seller like they're a bank. Like you're walking into the bank and talking to them about structuring a loan to give to the buyer. That's how I would approach it. On the left side is, oh yeah, Carol.
Is there as much of a down payment like you would need on a regular loan?
Same thing. But if they don't have as much money, right?
Right.
Maybe the seller would be willing to give a little bit more on the loan.
Right.
You need to know if that seller needs to walk with proceeds. That's the main thing. So if they don't and they're okay, you've got a whole amount to work with, right? That you could give to that buyer if the buyer can afford the payment and the interest rate and that seller is willing. You can do 100% financing if it's available, I mean, you can do that. That's the joy. You don't have lender regulations stopping you from setting loan terms the way that the buyer and seller want them. It's their option of whatever they want to do. Yeah, Mark?
Can I make a comment like from...
Yeah.
And I learned this, I did 2 of these with the same investor, and I knew nothing about them. They taught me, they're pretty sophisticated investors. So in terms of the down payment, when they're doing this, they're looking for 2 things, because they are sophisticated. They've done it, not on any of the ones I did, but they've had to foreclose. So they have an attorney, and they know how much it costs to foreclose.
To foreclose, yeah.
So to mitigate their risk, they look at the debt, what they need to get down. They want enough down to pay all the closing costs, commissions and everything. And also if they have to foreclose, they want to have enough in that down payment
for them
to cover that cost. So I think if I was a listing agent talking to a seller, I think that's the approach I would want, because I would be afraid of having a transaction, and if the buyer didn't make the payments and the seller had to foreclose, if the costs were more than the money they received,
they're going to be out of pocket.
They're going to be out of pocket, and they're going to be looking at
This
me.
is a great deal.
They're going to be looking at me.
Yeah,
so
and that's why you have to have those conversations.
Yeah,
that's why you talk, because that particular seller is a scenario like that. If they do it all the time and they have that more risk, if they maybe done 6, 7, 8 of them, there's a risk that you're going to probably have one buyer in that's going to maybe default.
Yeah.
So the more that they do carrybacks like that on investment properties, you are putting your percentage of chance of default, the more you do.
Yeah.
So, and here's the thing, as a seller, you can ask for credit. You can ask for credit from the buyer. Sometimes buyers might be doing this. Maybe they just moved to town. They can't get a regular loan because they're not established with their job yet. They haven't been in their residence long enough, but they have money. They just don't qualify with a regular lender. So here's another reason that you might go talk to a seller, right? And say, hey, I've got somebody who's got money. You're still gonna walk and they're gonna come in with cash to close and do maybe an 80% loan or something like that. But they don't have to do everything else that the lender has. So it's just option. You guys are gonna hear me say option, because that is what it is. It's just an option for somebody to have a choice. On the left side, let's look at these loan servicing, because they are different companies, and I don't ever just want to put one in there. We want to be fair to both companies in town. And I shared with a couple of you, the only reason I refer to my agents I work with U.S. Loan Servicing is because I have relations there, and I can get help. If a client is struggling or there's something that they need from them and they call me and go, Terri, I've been reaching out, I can't get a hold of them. I can call the GM over there and say, look, you guys need to call this buyer back. And it happens. So that's the only reason I use their name more, is because I have some pull there to help a customer. Westar though, I will tell you, I've had 2 of them recently and they've been very good, very good. So I don't think you'll go wrong with either place. And I did share the difference with Westar. The thing that's really good about them is they will take a payment out of your buyer's account, and they can also auto deposit it into the seller. U.S. Loan Servicing will only auto deposit for a seller or a lender. They will not do automatic withdrawal for buyers. So there is a difference, and if you want that, and that seller's adamant to have the buyer's payment automatic withdrawal, then you would probably go with Westar. Both of them are very similar on the questions that they ask. And this whole page, I will normally complete these for you. But I will tell you, if you guys are working somewhere else, I see even other escrow officers in our company do not complete them. They expect the customer to do it. I prefer to do it because I want to make sure everything's on there and I don't have loan servicing calling saying, Terri, we're missing this, Terri, we're missing that. Because then it's just more after we close, right? So it's just familiarize yourself with these, because if you are going to jump into these, you're going to want to use these and build a relationship with one of them. The fees are on the other second page here. The norm for setting up a carryback is normally $125, and then their fee is $14 per check. So in a carryback situation, you're going to have one payment that's going to go to the seller every month. So that's one check charge. Then you've got the HOA that might be paid. That's another check charge. So you just have to make sure if you have some things, like maybe 2-3 things, that's going to be an additional amount that the buyer has to know it's going to be added to their payment. So $28 is normally, but sometimes people are tight, right? $28 can be a lot for sometimes. So, but yes, that's all that you would do on these, is just look at the prices, go over it with your customer, and then I'll complete everything in compliance with the contract and financing addendum. And then Westar, like on this one, the only difference here too was that, see the direct deposit and the auto withdrawal. I put copies in there for you guys too. And I can always email these to you. If you go on their website, you can create a Word doc, but I can also send you guys a Word doc if you just want to put them on your desktop. So just let me know and I can forward those to you. Let's see. What else should we chat about?
I have a question.
Yes.
All right, the insurance, and this is for experience because I screwed it up. So the insurance binder, like when you're doing one of these,
Yes.
like where's the responsibility? Whose responsibility is it to check the insurance?
Buyer is responsible
For doing it?
to get their insurance, to provide their insurance agent with the information for the mortgagee clause. If there is a lender a lot of times involved, like a bank, the bank would normally order it. The buyer would give their agent information and the bank would do it. But in a seller situation, they're not gonna call the homeowner's insurance agent. So that buyer needs to call their agent, tell them they're doing a purchase, they're doing a carryback. Not all agents know what they are, so you need to have that conversation and just tell them, this is the mortgagee clause, the seller's name, and if you have the loan servicing, it would be care of the loan servicing. That's all you have to do is have that on there, and then that seller's covered.
Alright, so where I made the mistake, I did a carryback last year. It was a manufactured home out in Pahrump on an acre. So our purchase price, our sales price was
I don't like bubble loans.
Yeah, but it was,
Ugh.
but what happened was 266, the loan was somewhere in the 230s. And, you know, filled out the addendum perfect and everything was good. But it turned up at closing, the insurance binder was on, because it's for a manufactured home.
Only on the trailer.
That was for the trailer, only on the trailer, it was old, it was only for like $100,000.
And they closed?
So, no.
Oh,
they
good,
didn't.
at least they.
But once again, it was because I screwed up, like it was the investor
Well,
that
no,
called.
you really didn't. Here's the thing, you didn't, because, I mean, I look at that the agent, homeowner's insurance agent messed up, because they need to be asking the questions. They need to say, what are you buying this house for? What's your loan amount? What's that? I mean, they're the one preparing that document, right? So they need to ask the questions to complete that. Or they are going to just put their low amounts of 100,000 or something on there. So to me, I mean, yes, you can talk about it and tell your buyer and educate them, right? But I still think that's more on the insurance agent, because they should be asking their customer. They know when they are issuing insurance on a home that they've got to cover at least a loan amount. I don't know an insurance agent around that doesn't know that. You have to.
I do.
Then we gotta get you somewhere else. I'll send you some referrals.
I was the listing side, alright?
Oh, got you. I'm sorry. I thought you were the buyer's
No,
agent.
I'm sorry, I was
No.
I was on
understand.
the listing side. So that's why I say I kind of screwed up. So my sellers were the investors.
Right.
And they're the ones that called it at closing. And you know, with the normal listing, we don't, you know, the bank, there's a lender, the bank takes care of it. Have the insurance to check it. So this is one thing that I learned as a listing agent. I need to be asking the buyer's agent to get me the insurance
Copy of it,
binder.
right? So you can make sure that everything's covered.
Yeah, that's
Perfect.
one of my jobs. But
That makes sense to
that
everybody?
That was a mistake I made.
Yeah, no, that okay. I don't know if it was a mistake or just an oversight. I'm not
Well,
gonna say.
My job is to protect the seller, and
Right.
And I never thought of, you know, I filled
Of the
it in,
insurance.
but I never thought of checking it.
Yeah.
So that's something.
But see, it stuck with you, right? You're
Oh,
later, you're like, oh,
absolutely.
it's on my brain. I know that will never happen
Absolutely,
again. So,
absolutely, yeah.
we live
But
and
it
learn.
was-
Yeah.
But it was one of the things.
did you have a question?
Yeah, so for that German situations, why the loan service company not get involved?
Because they are kind of a third party like I am.
But
On a
I
transaction.
know the loan, like, for example, we get a loan from the lender,
Mhm.
we have standards, have to meet, like requirement.
But loan
So the
servicing
loan-
is being hired to
Oh.
handle payments
But,
for these customers. They're not being hired to make sure all that paperwork is right. It's
Yeah.
being submitted to them in a packet with their fee, and then they create their account. And they're very good at making sure, like if I forgot to put something in there, they'll email me and say, hey Terry, where's the insurance, or where's whatever, where's the amendment for this, they double check me, but they won't do the initial because they're not a party to our file yet. They become a party to the transaction once we close and send the paperwork and the money to them to set up the account. So that insurance and everything has to be done beforehand. So that's why it is the buyer's responsibility. But like I was saying, you've got to have an agent, welcome by the way. You have to have an agent that is helpful, that kind of knows, you know? That it blows my mind, Martin, that you had somebody that didn't
How
know.
about seller can just not close the escrow until the buyer provide.
Oh, yeah, of course, that is a requirement, absolutely.
That is a requirement.
We won't close normally without it, so it has to be submitted. But what Martin was talking about is he, as a listing agent, didn't put his eyes on that to make sure that the buyer did that, but they didn't put the right amount to make sure that that seller was fully covered. So if something happened, God forbid, the house burnt down or something,
So buyer
there's
has a
only 100,000 coverage, and you've got a $230,000 loan amount that the seller carried. Now you've got 130,000 that they're gonna lose because there's no money to be had. So that's why it's really important to make sure, you know, that the buyer's doing what they need to. Thanks for sharing that,
But
Martin,
the
because that's a
buyer-
good story.
Buyer has a right until the seller has a right until the buyer provide the insurance meet the requirement.
It's contractually, they're obliged through the financing addendum.
Yes, it's on there, it's part of your
Okay.
contract.
It's on there to have, that the binder has to, the insurance has to cover the amount of the loan.
Mm-hmm.
However, in my situation, if I didn't have a sophisticated investor who was paying attention, it would have gone through and it would have closed.
On the financing addendum, where Art's talking about is that item 5 on page 4, that clause is very clear that that buyer has to provide well, this says prepaid, but like I was saying, you don't have to prepay it. We can pay it through the escrow, which sometimes I prefer, because if somebody paid it, I've had this happen, where they paid with a personal check, I get a paid in full receipt from the insurance agent, and then their check bounces. And then the insurance agent, of course, is like, but they can cancel that insurance if it doesn't get rectified. So, yeah, we've had that happen too. And then they have to go, and the seller had to get back involved because the buyer had to go get new insurance, and yeah, that can happen. Yeah.
Yeah, actually, I have a house on the market right now,
Uh-huh.
and I do receive an offer. It's a seller carry back.
Oh, it is.
So the buyer actually is an investment company.
Gotcha. It's an LLC or somebody.
Yeah, I mean, I don't mind to share if you guys want.
Yeah, no problem.
I mean, I can send you the term.
Yeah. Yeah, that's fine.
Question about the purchase agreement. So if I was representing a buyer, on carryback,
Uh-huh.
I see on the example, it says appraisal contingency NA, and then also, close of escrow, there's nothing. So typically, what is the time frame for something like this?
As long as there isn't an HOA,
Okay,
that can delay, because we all know that HOAs take normally 10 business days once they get paid. So if you want to do a week escrow, we normally can.
okay.
We can get our prelim in 24 hours, 48 hours, order all our demands on opening. So it is something we can do.
Okay,
You don't have to wait. You're more waiting on me
sure.
at that point to have the time to get the docs prepared, because I have to type the note, the deed of trust, prepare the loan servicing, type all the backups. So it's more just my schedule of doing
Got
that
it.
too, to make sure I can
Okay.
hit it for you.
So based on if there is an appraisal, you know, if this buyer decides they would like an appraisal or, you know, due diligence period plus like an
Yeah.
HOA, then that, okay.
Then you can mark it. Yeah.
Okay.
Most of the time, that's one of the joys. You don't normally have to. They'll pull
Sure.
comps
Sure.
from us and just find out what the prices are in the area and kind of go with the norm. So you don't have the appraisal expense, but no rules on this, you
Sure.
guys. Again, whatever you want to do between the buyer and seller, you just talk about it. If that seller wants that credit report from that buyer to make sure that their credit score is good enough, if they want financials from that buyer to make sure that they're gonna be able to cover the payments, they are entitled to ask for that. And you just put it as part of your contract. You know, seller requires financials to be approved prior to close of escrow or something like that. Appraisal, you can put not applicable, or you can put there's an appraisal that needs to be done. It is open to whatever you want to do, because you don't have any rules from an institution.
Yeah.
So that's where it's kind of nice.
I would also comment that it's important to have a title company and an escrow officer that knows how to do these. So what a Pahrump didn't, and it sucked.
Well, you
Really?
come
I
up,
would think out front.
It was this particular, I don't know whether it was whether they didn't know the seller financing or that just suck.
Well, I'll be
generally.
honest, in our company too, there's only a few of us that do these. There's a couple of transactions, I'm the only one in the company that does them. So it shows you that it's a niche hole that you have to really perfect and work on it and learn. I've had to do that over the years, and and the laws changed. So I've got to stay abreast to that too, because these transactions, we got to make sure. You asked me about contract for sale.
I did. I just, before we go on to that, it was the first time I ever, because the buyer's agent or the buyer chose the escrow officer or the title company and said she had worked for before. And the buyer's agent apologized to me for choosing that title company.
Yeah,
There you go.
it's
First time that ever happened.
I've experienced personally, in the years back, situations like that.
Yeah.
And even when I sold my mom's house, it was XYZ Title Company,
Yeah.
and it was the most horrific experience I've ever had. And I was emailing and on the phone with them all the time.
Yeah.
And like, they would say, oh yeah, we're gonna do that. Okay, well, where's the document? I mean, it was so horrible, you guys. So you're right, Martin, you want to have somebody that you can work with that's going to be able to help you. Even, I can't structure deals for you, but I can definitely like, hey, no, you can ask me the questions and I can tell you.
Yeah.
So, but definitely reach out to me, guys, if you have questions on these, because they aren't difficult. It is just making sure every single person in the transaction is on the same page. That's how you stay out of court. And that's what I share with everybody. Creative financing deals can be a little bit scary, and there is a lot of risk to them. But if everybody, knock on wood, one time I've been to court, you guys, one in 37 years. And I do these type of transactions, but I will not do them if I feel there's an issue. I'm picky too. If it's not written right, I'll share that, you know what I mean? So it's just making sure too, you're working with another agent. If they're new, that's okay.
Yeah.
Just make sure they're getting some help and from their broker, or they're, if you're knowledgeable, that you guys are talking, because I see that sometimes the agents don't want to touch it because they might be new and not understand. But it really isn't a complicated transaction. It's just making sure that the buyer and seller know the risks and liabilities that can come from it. Do you guys have any questions on what we talked about, or any of the process or anything? Yeah.
Sorry, go ahead.
What's the difference sale to the company compared to the individual?
What do you mean? I'm sorry.
Like-
Oh, you mean as far as the entity purchasing or selling?
Yeah, what's the difference?
No difference. No difference. If it's an LLC that's gonna buy, they can do that, and we just require a copy of their LLC documents. So if you have a client that has an LLC, we always require the operating agreement and the articles of incorporation to verify who the officers are of that LLC, and to make sure in the operating agreement that they have the power to borrow money and purchase property. Because I've had LLCs that they don't allow purchases through them. They might allow conveyance to sell, but not new purchases. So you have to read through that operating agreement, which is why we require it right when we open, so title can review it and let us know if there's any issues.
How can we know they do have the money? Like, for example, like individual, maybe we can require to have the credit report?
Yeah, you can go through an attorney and ask them to provide a letter like that. I have, it's a priority letter that I have, I'm trying to think. I have a team that does a ton of these, because they have one particular seller that owns a ton of properties, and they do this. This is what they do. Only carrybacks on all of their files. So but there's LLCs that came in, and the particular beneficiary said the same thing. How do I know? How do I know about their financials when they're blocked by an LLC? Which is also part of the reason we have actually gone, when we run a name, if the seller's an LLC, we are running the personal name of that LLC, and that person, that's the owner of the LLC, because fraud comes in, you guys, and they hide behind their LLCs.
Oh, wow.
So we never did, Martin. We used to for years. We just ran the LLC, right, and got the information and went. No, because fraud has gotten so bad over the last 10 years that we now have to make sure that we are checking that individual as well. And we find them. We've found plenty of times that that individual is hiding behind their LLC and they have judgments galore, IRS liens. They think that they can jump into the LLC and hide that, and that we won't. And we used to close like that back forever because you just kind of trusted the LLCs, right? But no, over the years, the fraudsters are smart, you guys. It is one reason that our security levels have gone up substantially. And if you are not working with a title company that has that security, don't work with that company. I'm being real serious because it is important. We've had people whose identities have been stolen through a transaction, not from our side, but believe it or not, when you're an agent, if you let's just say a buyer is looking on Zillow, okay? They're just out on Zillow, right? Guess what? Those fraudsters have already hacked into that buyer email address. So let's say they call you or they email you, hey Ashley, I saw your name and so now your email's compromised because they've been in on the buyers already. You haven't even gone to contract or had a conversation and they already are in your computer. So you've got to make sure that you have very strong security systems in place and working with companies that do as well. That's why we're so tight on some of the stuff we do. And it's frustrating, but there's a reason for it. So we have a very strict opening process now for buyers and everything to protect them. So
Foreclosure questions. So
Yeah.
you had said that you have worked with a couple lawyers. One's more affordable, one's more expensive.
Mhm.
Can you explain maybe generally,
it's more of a retainer fee,
Oh, okay, gotcha.
what they think their time is
So
worth.
is the foreclosure fees based on the cost of the home, or, because I'm wondering, is it a couple $1,000s, or are we pulling tens of thousands of dollars?
How about I pull you some info and I'll email it to you guys,
Okay.
so I don't misquote myself.
Okay,
Because the foreclosure laws change constantly in this state.
okay.
And in our county too, just in our county, we've had
So
them
yeah, just
adjusted.
guiding a client, is it a,
Yes.
yeah, I just didn't
I
know,
will,
like, a range.
I will send you, I'll send it to all of you. You
Okay.
guys are all signed in, right? And I have all of your emails. So I will I will end up wording both of these sets for you guys, so you have them on your computer. And then, I will send you the attorney information and I'm gonna pull up the percentages and just see if I can get you some of that info.
And then a follow-up question, so since we're in a judicial foreclosure state,
Mhm.
states that are not, what does that look like? So like if an investor comes to me and, they maybe realize that Nevada's maybe not the right situation?
Well, you are still a foreclosure state wherever you are. It's
Okay.
just a different type of foreclosure.
Okay,
So it might not be judicial, it might be district, there might be different types of
Okay.
foreclosures in those states, but foreclosure still exists.
okay.
So it's just a different process
Sure.
and maybe less amount of money or maybe even more. But for here, I'll grab you your info so you at least know the percentage or something, because there has to be. But the last foreclosure law that I read, I didn't see it in there. So that's why I don't want to misquote. I want to make sure I pull it for you.
That's really interesting how you run the corporation or the
The
person,
name.
the name.
Mhm.
Now, the issue is at what stage do you do that? Because if you,
Beginning when we open.
Yeah,
So, but that's why if you are representing somebody who has an LLC, don't wait until you open escrow. Make sure you're having that conversation with your seller and say, oh, you're in an LLC, title's going to need your operating agreement and your articles of incorporation automatically. We can get around operating agreements sometimes by doing a non-operating agreement affidavit that the client would complete, but we cannot get around articles. So articles are something that we have to have, and that's what's done through the Secretary of State and filed. I've had some LLCs, they didn't do their articles. I'm like, it's normally the first thing you do with an LLC, but there are some that didn't do it, and they have to call the Secretary of State and get their articles done really quick. So it's doable too, even if they don't have them, they can get them. I have a gentleman right now though, who's in Mexico. He's an elder gentleman, he's sick, and he is closing on a house, and I can't get the articles. And he has had a really difficult time, and because he's down there getting treatments and stuff, he won't be back until the 17th, and then we're supposed to close fairly quick after that. I've incorporated some help to even see if we can pull him off of the Secretary of State website. We don't normally ever get involved with paying for things, but we're in a situation that we need to maybe get these, and then I can bill the seller through the file for the cost, but I don't know if we're gonna get them. And we've been waiting for like 2.5 weeks for this, and we're supposed to close in a week.
See, what I'm thinking from the seller's perspective, so if I got an offer from an LLC, we opened with you guys and you did random and you say, yeah, your buyer is he's brought up to the
Right.
the yig yak.
Yeah.
Well, I'm on the seller's side, so I don't have a way to get out of the deal.
Yeah. Of the deal,
Yeah, because it's on, because it's on the listing side.
right, but
You-
your seller still has rights. He's still, if you feel that you're entering into a fraudulent transaction and that buyer is fraudulent, that seller absolutely can cancel that transaction, and they can do it within the due diligence period, just like a buyer.
The seller can?
The seller can cancel. I have sellers cancel transactions.
And
They have to talk, might make the buyer mad, right? And buyer might say, hey, you know, they might have some issues. They might not sign the cancellation instruction because they might want to go through with it. But if there is a just cause that they think, or they could even share it with us, I can't, you know, like if they have specific information of a fraudulent transaction, I'll resign. I won't close it. If I even feel it, I've resigned from a few transactions before because of that. We get diving in and I'm like, you know what? Because your gut is your best thing. And if your gut's telling you something's wrong, it normally is. And so I will trust my gut all day long. And I've even told somebody, you know what? I may not have even been 100% clear, but I felt it. I knew. I'd watched the signs and I'm like, you know what? This one's not good. I tell them, sorry, I can't do it. We're gonna have to, you know, move it to another transaction or another place, or even maybe another escrow officer, and even our upper management might. But me personally, I'm watchful of the transactions that come through, and I make sure that you guys are covered too. Like if I know the agents I'm working with and I see something going on, I'm gonna share it. I can't call somebody out on, you know, specifically like, hey, you're a fraud, you know, but you can definitely feel that. So your seller does have rights. It might get sticky, Martin, and all of that, but if they think it's fraudulent, they can approach them and then go to the broker or the agent on the other side and say, look, this is why my seller is backing out. So you need to tell your agent don't give us any issues on this, you know?
it's interesting because when we get the offer, it's just, you know, it's the RPA with ABC LLC.
Right.
And that's all we have. But
Yeah.
you might have a letter like, you'll have a letter like showing.
Yeah.
These people have.
And if you even have questioned before, add it to your contract. Just put it in the terms. That the seller also has the right to cancel until they have verified the financials and the individual of the LLC. You can put it right in there. And then your seller, if they find out that that LLC and that person's not who they thought they were, sorry, we're canceling. I'm gonna get another buyer. Yeah, so if it's in your contract though, that's what that page 10, all that extra verb blank there, fill it up and just put with whatever you want to cover your customer. And if that buyer doesn't agree, then you move on, right? But you know, why wouldn't they agree? Because they probably have some sort of
That's
fraud
right.
behind
If
it.
they're clean, they're nothing to
then they
worry
don't
about.
care that that clause is in there,
Yeah.
right? So
Yeah,
it helps you to weed it out. So, that's all I really have on this. I know Martin asked me, and we can't dive in because we're on a time frame, but
Yeah.
a contract for sale, just so you know, is a transaction where a seller is basically carrying a note on that. That buyer is normally assuming their first too, okay? So a seller normally has a loan on their property, and then they'll carry the balance to cover as long as there's equity. You gotta have equity. And there's no fee title changes hands. So that seller remains the owner of that property until the end of the term of the contract for sale. So, and here's the thing, another scenario, kind of like the same situations, a buyer maybe has money, they just might have no job history, they might have issues that prevent them from getting a normal loan. So maybe in 3 years, they're gonna have that, or even a year. Hey, I'll have this all established. Can we do a contract for sale for a year? Seller remains the owner. They take over the payment on that seller's first, the seller carries the balance. They still have some cash to close to come in, but then you set up a loan servicing, and that loan servicing pays that seller's existing mortgage and also sends the balance of that to the seller each month. So, and then you can do whatever term you want. Bless you. And then at the end of that contract for sale, that buyer has to go out and refinance and get their own loan to pay off that seller's loan. That's the issue though, right? Your seller's loan is still pending. So if that seller has to have their credit intact or something showing that loan isn't there, then they can't do something like that. But if they can qualify with me, you know, like going somewhere else and they need to qualify and they can deal with another pending loan showing, then they should be fine. But they have to know as a seller that loan is still out there in their name, property's in their name, and they are trusting that that buyer is making all those payments through the loan servicing.
What would be the benefit to the seller to do that versus?
Well, he still owns the property, right?
Yeah.
They still own it, and they still can just take it right back if that buyer
With the
does it.
it wouldn't be the foreclosure process.
No, this is where we do the deed to send it to the loan servicing company, because they won't come back through and that buyer's gonna go refinance. So what will happen at the time of the end of the contract for sale, they'll have that deed that they'll be able to record when they do that, and it'll convey it to the buyer at that point, and then the buyer's new loan would go off. They would pay off that existing loan that the seller had, plus any balance that's owed to the seller. And then that deed would be recorded, they would refi, get their new loan, done deal.
But there would be liability on the seller
Of course.
if something happened to the house.
Yeah, of course.
Yeah, so that would be.
Yeah. And that's happened too. People destroy the house, don't make the
Where the
payment, seller's
carryback-
gonna take it back a year
For the
later and it's a
carryback,
mess.
The seller's like has no liability because it's in the.
It's in the buyer's
buyer's
name,
name.
yes, and they're just, it's their loan that's being affected, not them.
Would be a to know if the foreclosed and the house is all beat up.
Yeah.
Yeah, that part, if they gotta put money in.
Yeah.
So,
Either way.
the main thing that you guys need to always keep on the top of your head with any sort of, these are creative finances, right? That's what that means. You can create it how you need to create it. But everybody's gotta be in agreement. Any other questions? No? Do you guys feel like you understand them a little bit more?
Yes, thank you.
Yeah? Okay. If you, yeah.
I'm a little bit confused, so
Yeah, no, please.
if the buyer doesn't pay for a loan,
Yes.
who will be
The seller will foreclose on them. Because the seller is carrying their loan. Pretend the seller is Bank of America.
so for example, like, the seller still have the mortgage is carrying on?
Oh no, that's on a contract for
That's
sale.
contract.
Yeah, on a seller carryback that we're talking about here, most of the time the property's free and clear. Or maybe they owe a couple $1,000s or something, you know? So we've been paying at
The
closing.
seller lender is still on the first deed.
Yeah, so the seller is the beneficiary on a first. There is no other loan on the property, normally on a seller carryback.
I see.
It's a free and clear property. The seller owns it outright. So now he's gonna carry a loan and let that buyer now. So he's acting just like a bank, a credit union, anybody that's gonna give a loan, that seller is individually doing what that corporation normally do. So, yeah, they're just acting like a lender. But they would foreclose just like a bank does if we don't make our mortgage payments on our house, right? So.
Okay. Thank you.
All right, and you have my card there. This isn't the end of our conversation. If you guys have questions, just call me or email me.
Thank you so much.
Yeah, of course. And if we can't, and we'll get together, because if there's a need for some other things, because I do so many classes, you guys, besides Carrie's. We have wire fraud class, and we have a FERPTA class, and we do a mastery doc class, which I think you guys would love. It's a mastery doc class that I created, and we talk about power of attorneys, bankruptcies, LLCs, out of country signings, Ron signing. We talk about a few different things. And veteran agents even, they love it.